Hello, today is Thursday, the 29th of November 2007, and the market has closed, so let's go ahead and take a look at trading for today. The S&P 500 did add a penny, according to my screen here, closing at 147.17, and basically I think it probably frustrated a lot of short sellers who were looking at this rally yesterday and saying that it's probably due to fail, which I think it most likely is going to fail. However, let's just wait for the evidence to tell us that that's the case. What you'll notice again today is that we had lower volume one more time. So the buyers are maybe running out of ammo in here, but the short sellers haven't really come in and taken back control yet. But don't give up on the ability of the short sellers to push things lower very quickly. If you remember this rally back here in August, this 3-day rally took the market from a low intraday of 146 up to a high of 151 or so. And actually, I looked at that wrong. Low of 142.5 up to about 151 or about 8 points. And on my blog this morning, I put a chart with a couple of actually 4 different rallies in late 2000, early 2001 for the NASDAQ. There were rallies of 8%, 10%, and 16% in one day during the throes of what's been the worst bear market really for our generation. So these rallies can hold on for a couple days, but they usually resume back to the downside. So maintain a very high level of alert for signs that the evidence is pointing to a failure of this move. When we look at the 10-minute time frame, that evidence isn't there yet. And like I said yesterday, that I think that we're going to have to see this 5-day moving average begin to flatten out. We'll have to see if this 145 level acts as support. The odds favor a resumption of downside, but that doesn't mean it happens every single time. Just like a presidential cycle doesn't guarantee anything, or 5 days down in a row, typically the next day will be up 80% of the time. That's all good information, but it doesn't pay the bills. What pays the bills is listening to price action, and right now the intermediate term, we've got a little uptrend here. Yesterday, like I said, that I think that this will probably be maybe 2 to 5 days before we can start considering the safe side, the short side safe once again. But that's just typical. It doesn't mean that's what will happen. Maintain a look at the intraday action. I think breaking below 146 probably leads to that test of 145, and if that's the case, maybe we see the rising 5-day moving average come up to meet it in there. Like I was saying yesterday, I think that this action is going to be similar to what we've seen in Google, and Google acts pretty good actually. We had the divergence here on the hourly time frame. In Google, let's take a look. Let me just punch up Google here. We had this divergence on the hourly time frame. The stock broke above the 5-day moving average. The 5-day moving average acted as support. The market then rallied up to what was, I think, about a 2/3 retrace or 50% retracement initially. Pulled back to that 5-day moving average again in here, and now it's up at the 2/3 retracement. So Google may be getting a little extended here in the short term and due for some profit taking. But let's just go back to the S&P 500, because I think we might see a similar type of scenario where we get a pullback to there, and then maybe another move higher. Maybe we build a right shoulder here intraday. You have to be aware of all the possibilities, because if you're not, the market's going to catch you off guard, and you're going to end up with big losses in your account. So realistically, the daily time frame says continue to be very, very cautious. Any trades that I'm doing in here are more than likely going to continue to be day trades, because we've got mixed signals from different time frames. Looking at the semiconductors next, they were down 12 cents today, and this group again has been the weakest. It's a bounce and a downtrend. This level here is going to be important for the semis, so about let's just call it 415, because I think that's where we're going to see this 5-day moving average catch up to it tomorrow as well. But I think if the semiconductors break below 415, that might weaken confidence overall. and as they are a leading group. They've led this market lower here recently, so keep your eye on that 415 level. Breaking below that and staying below it might motivate further selling in other areas of the market, such as the IWM, which was down today, actually 47 cents. So it lost 2/3% today as it came up to its declining 20-day moving average. A lot of times in these downtrends, first you get resistance at the 10, then the 20. Bounces become stronger the later on they occur. But right now, we still have this very solid downtrend intact, lower highs and lower lows. No reason to think that it's going to reverse in here, especially with, again, you see this low volume. Volume doesn't pay us, but the volume does warn us that buyers were motivated yesterday, because what happens a lot of times is that the short sellers are the first to buy because they want to lock in those profits. That brings in sideline cash from the participants who are looking for the bottom and continually buy each one of these rallies very reactively. These rallies should be sold into if you're long when they start to show signs that they're weakening. Now, just because we were down today doesn't mean this market's weakening, though, because we've got what's a pretty important level of prior resistance, which ought to act as support near about $75.80. So that level is going to be important for this market tomorrow. You also have this 5-day moving average, which is rising. So you want to give the benefit of the doubt intermediate term to the buyers. However, this larger time frame always takes precedence, which is why maybe during the day you should be looking for long trades, but they have a higher likelihood of failing because of the overall downtrend. So again, what that equals is just a high-risk environment. The NASDAQ 100, yesterday the buyers regained control here as well when it took out this took out that $50 level, and then confirmed it by taking out this level on the gap. Held on to those rally gains all day yesterday, and today it was choppy, but we saw the market battling back and forth above and below this daily VWAP, meaning that basically we had for the most part, we had an uptrend. We had higher highs and higher lows, but there wasn't really it wasn't a runaway market the way we had yesterday by any means. And looking at the 30-minute time frame, if we put some Fibonacci levels on here let's just take it from the most recent, failed breakout right here to the most recent low. We're right now at about 50% retracement of that move from this level up here near about 54.80 down to 48.70 or so. That's the 50% retracement level. 61.8% would bring it up to about 52.5. So maybe that's where this market goes. We're getting close to that 50-day moving average as well. Just continue to stay very disciplined in here, as these, the market is very emotional, and that means that moves are going to come quickly, especially when we see lighter volume like that.